And welcome back. The Federal Reserve may have some good news for all of us tomorrow, and we're looking forward to it. The federal agency will cut the interest rates for the first time since 2020. But what we want to know, where on the factor here, is what will this mean for you and I, the regular folk out there on Main Street America? Joining us to talk about this is financial expert and CPA Lucy Petrie. So first of all, let's establish, when we say the feds will reduce the interest rates, what the hell is that?
Okay, well,
let's start from the bottom.
Who is the Fed, right?
Yeah.
All right, so that's the federal bank, it's a government agency. They try to help us control the economy or assist us. So for example, if we need to stimulate the economy, we're going to reduce interest rates. That will cause technically people to spend more money and stimulate the economy.
Now, there was a time where we were spending too much money, and they rose the interest rate.
That's exactly
what
happened.
What the hell? Are you working against us or with us?
I know, well, that's just to try and slow down the pace of spending. You know, housing, the mortgages got super expensive. That was a way to pull back.
Press the brakes a little bit.
Exactly. So that's
now, when we talk about them reducing or lowering the interest rates tomorrow, what does that mean to the average person out there? Obviously, when you pay these credit card bills, and if you pay attention and you look at, especially if you do a minimum, a majority of your payment is going to interest, and like $10, $15 is going to your principal.
That is correct. Now, I want to put things in perspective a little bit, and if you will let me do just a tiny bit of math. I know it's late.
Okay, go ahead.
Okay, all right, so here's the deal. They're going to cut the rates between 0.25% to 1%. Okay, so 0.25% out of $100 is 25 cents. Okay, 1% out of $100 is $1. If you have thousands of dollars in credit card debt, that will hardly make a difference in your monthly bill. But also, chances are the rate is already set on your credit card. If you see a reduction, it will be minimal. Okay. If you have a mortgage, that rate is set. It is not going to change, unfortunately. Same thing for card note. So it will affect new.
You have signed contracts for those things.
Right. So
things. Where can this help, Lucy?
Okay, so new loans for sure, or refinancing of loans, or even new credit cards. The rates may get more competitive, or try and get people to sign up for the credit cards. So it pays to shop and try and find the credit cards with the lowest rates.
Now, what about daily goods? How could this, if at all, impact that when we're going to the grocery store, when we're going to the gas station? If the feds lower the interest rate, and many people are saying anywhere from 0.25, but many people are like, I want to see 0.50, those experts who say this could help and stimulate the economy. But how could it help us when we're talking about everyday goods that we need as individuals?
Well, unfortunately, I do not expect for us to see a lot of change in the near term, in the short term. I do not expect the grocery shopping to be cheaper, or even the gas. It takes some time between the rate cuts and the economy actually adjusting, and the companies actually adjusting. Besides, once the rates go up, or once the prices go up,
what company's going to take it down?
Exactly.
You know, I mean, they're going to be like, that's on you.
Exactly.
That's your ass.
Right. Yeah. So that is not likely. I don't expect that to happen anytime soon.
So, I mean, we're just going through.
Now, here, the investments, maybe better for the investments. So borrowing, investments, and more jobs. Investments like the stock market, that will probably do better because the companies will have more money to spend. They will have more people buying their products. So we expect the stock market to do better. So if you have investments, that can help you.
And when you hear stock market, you're like, oh, that's not me. But then you think about your 401k, that is you.
Exactly, your 401k.
And your retirement plan.
Your retirement plans, your IRA if you have one. But also more jobs. More jobs because if the rates are lower, the companies are more likely to spend money and hire people.
All right.
So that would be nice.
Lucy Petrie, always good to see you here on
Thank
The Factor
you.
with the facts for the people.
Yes.
Even though we ain't getting crap on this one.